Hey everyone, welcome back to Prime Block Capital. I'm Funcho Ajibade, and today we're breaking down the real story behind Bitcoin's current pullback to $102,900 and why this may not be a warning sign but an opportunity. Fear and greed is cooling off to 68 and the altcoin index is just 22 out of 100. Which means Bitcoin is absorbing capital dominance while altcoins are being ignored. But that's often when we see rotation. So Bitcoin is still in a strong macro trend. So let's start with Bitcoin. It recently tested $105,000 and has now cooled off just under $103,000. That's completely healthy. The key metrics are neutral, ETF inflows are slowing but still positive. Spot demand is stable and derivatives open interest is down, which is less leverage in the system. Glassnode data shows no major whale distribution, just a pause. Support levels to watch are $100,800 and also $98,000. Resistance zones are at $105,000 and $109,000. Until Bitcoin loses 98K, we're treating this as a sideways build-up, not a breakdown. Now, the altcoin index at 22 means people have pulled capital away from speculative plays and into Bitcoin ETH. Now, that's not bearish, that's preparatory. We're seeing SUI holding its base, RNDR and ASI gaining quiet whale interest, Sol maintaining strength near $173, and meme coins bleeding 12 to 30% this week. Now, this is classic rotation behavior, and you want to rotate before the next pop. ETH, Sol, and AI sector momentum is where really the capital is quietly flowing. So ETH is above $2,600. Key levels we're watching at the moment are 2,480 and also 2,400. These are great zones for reaccumulation. Solana is one of the best performers structurally. Wallet activity is steady. Jito's gaining TVL and DEX volume is up week over week. AI coins are picking up after the big announcement this week. That $600 million AI funding round confirmed by Trump, Saudi Crown leaders, OpenAI, Palantir, all involved. It's big. Okay, so what's moving? RNDR, that GPU compute. Keep an eye on this thing. I believe it's going to fly. ASI, the new merged AI network. FET and GRT for data infrastructure tokens. This is where we're rotating clients now. So a bit of portfolio guidance by risk level. Here's how we're positioning clients based on their appetite. Low risk, 40% Bitcoin, 25% ETH, 25% stable yield, and the focus is preservation with passive income. Moderate risk, 35% Bitcoin, 20% ETH, 20% infra tokens like SUI, TIA, 15% in AI and 10% stables, and the focus there is rotation and upside. And then high risk, 25% Bitcoin, 20% ETH, 25% in AI coins, 20% across Sol and SUI, and 10% in cash. And the focus there is momentum, rebalancing, and fast scaling. Every plan is mapped to goals, volatility tolerance, and global market conditions. And here are some of the tools that you should be using right now. If you're not using the right data sources, you are gambling. So here's what we recommend to every client. You've got Look on Chain for smart wallet flows, DeFi Llama for ecosystem TVL and strength, CoinGlass for leverage and funding rates, and TradingView obviously for all TA setups. CoinMarketCap for unlock schedules and sector momentum. You don't need 20 tools, you need the right 5 and someone to interpret them with you. So final words of the day, this isn't the time to panic, it's the time to prepare. Smart money is already rotating. This is the moment most people go flat and professionals quietly accumulate. So if you want any help building a portfolio, rebalancing, or understanding how to use these tools, please reach out to us. You can also join our free Crypto Insights WhatsApp group. We drop market analysis, chart breakdowns, allocations, a ton of alpha every day. The link's in the description below. Please make sure you like, subscribe, and hit the bell. We'll see you in the next video. And remember, stay sharp out there.